Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu. And these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you. Hey guys, welcome back to Be Rich. Today we're going to try out a new format. We are experimenting with a different style of editing and a different style of content. The first 2 minutes of this video are going to be something related to the first ever IPO ever released. We hope you like this. If you like it, please do leave your reviews and comments in the comment section below, and we'll think about incorporating it into a larger format maybe, or a separate spin-off. That being said, please continue watching. Today we're going to be examining the first ever IPO recorded in history, known as the Dutch VOC company. Let's go. Let's break it down in 60 seconds. Did you know that the very concept of a stock market traces back to a single groundbreaking event in 1602? It all began in Amsterdam when the Dutch East India Company, or VOC, launched the world's first initial public offering. This wasn't just any financial transaction. It laid the foundation for modern global finance. The VOC was established to capitalize on the lucrative spice trade in Asia. But this was no small endeavor. Their voyages were dangerous and expensive. To fund these risky expeditions, they needed more capital than any single entity could provide. In a revolutionary move, the VOC opened up investment to the public, allowing anyone from wealthy merchants to humble artisans to buy shares. This was the first time in history that a company offered ownership stake to the public, a radical shift that democratized investment. Over 1,100 people invested in the VOC, including 2 maids working for the company's founders. These small investors weren't just backing a company, they were owning a piece of it, gaining a stake in the success of the VOC's global operations. The shares were transferable, meaning that they could be bought and sold, setting the stage for the creation of a secondary market. This ability to trade shares was crucial. It meant that an investor wasn't locked in for the long haul, but could exit their investment by selling their share to someone else. Amsterdam quickly became the financial capital of the world, with the VOC's model inspiring other companies and leading to the formation of the world's first stock exchange. This marketplace allowed for the buying and selling of shares in a variety of companies, establishing the principles of modern stock trading. Investing in the VOC paid off. The company's voyages were highly profitable, and shareholders received substantial dividends, not just in coin, but also in the very spices that the VOC traded. From this first IPO in 1602, the complex global markets we have today, the Dutch East India Company set the precedent. The world of finance was forever changed, and it all started in Amsterdam. Hey guys, welcome back to Be Rich. Thank you for watching the first segment of today's video. Do let us know what you think about it. So today we're going to continue the topic of IPOs. Yes, we talked about the Dutch VOC, the first ever incorporated company with shares trading in the open market. But today, we want to look at a few more modern picks where we actually examine certain companies, their market cap at IPO, and then their current market capitalization. Let's get into it. And disclaimer, none of this is investment advice. Please do understand this for educational purposes. That being said, let's go. So first of all, my uncle had shared a nice statistic with me with, certain companies, their market capitalizations at IPO and then their current market capitalization. So before we get into it, first of all, let's discuss the anatomy of an IPO. The anatomy of an IPO is basically when you have a private company which wants to get a market valuation, one, or it wants to get some funding for itself by raising money in the public market by giving out a certain portion of equity. Or the third reason, and one of the most popular reasons today, is that the seed investors want to exit and take their money out of the company. Venture capitalists, angel investors, these guys want to take their money out. That's the third reason why a company could go into an IPO. And these reasons could be simultaneous as well. So that being said, let's examine some of the data points which we have here. So what is really glaring to me is that a lot of the, finance companies, that is tech finance.
I'm sure Rupesh would have shared this on the screen.
Yeah, our editor Rupesh must have put this image on the screen. And you can look at companies like Coinbase and Didi, Robinhood, Mobileye, Unity. I'm surprised Unity is also a company which has, taken almost a 50% hit in its market
Haircut, yes.
capitalization. Yeah. But
The only one which is the other way around is Mobile Eye.
yeah, Mobile Eye.
Yeah.
So even DoorDash has taken a
Massive hit.
It's at 1/3 of what it was before. So first of all, preliminary observations. What do you think about this chart? Given that it's today.
I'm not saying anything wrong with the company. There's nothing wrong with the company, nothing wrong with the business model. It's what Warren always says. You want to buy it at value. So at IPO, we all think it's being offered at a discount because historically it used to be like that. So the notion still continues, that fairy tale that we think that IPOs are being offered at a discount to investors. So more investors will enter that gate and so they can raise capital. Nowadays, it's more like lamb to the slaughter.
Yeah.
Investors want to get out. Angel investors and venture capitalists want to get out. And even sometimes the owners themselves want to get out. And I don't want to mention specific Indian companies, which my brother will definitely talk lots about. You guys can hear that.
Yeah.
But it seems to be an exit door. So you can see that happening over and over again. But if you do like the business, you do like the product, you do like the brand, you're better off to wait for the IPO to happen, and the market to cool off, and then buy it at value. Imagine if you're a guy who took, Rivian at IPO, and now you're sitting on the share, how you must be feeling, or DoorDash, or any of the other companies in Shashwath's list. If you picked any of them at IPO, hoping to buy at value and hold it for long term, you must be feeling quite sore about it. Because if it goes down by 50%, remember it has to grow by 100% to reach back where it was.
Yes.
It's not it grows back another 50%. It has to literally double.
Yeah.
So that is the problem. When you see haircuts of more than 50%, it's gone down by 75%. Growth has to be more than 100% in that share for it to come back to where it was at IPO levels. So that is a problem. This is the main reason why I would avoid IPOs. You are better off to let the markets dictate the value. And if the value is there, and especially when the finances are published, a couple of years worth of finance happens, the business happens in public transparency and all the records are filed and you can pour over it, then you'll really know where the truth of the matter is. And then you can see if it's worthwhile entering these companies at all to start with.
I think there's a key factor which drives people to IPOs, and that is FOMO.
Yeah.
It's as simple as that. We have a fear of missing out. And it's a very human thing. And that really pushes us to get into, dangerous IPOs. And we play the IPO lottery. Sometimes we make some money in the short term, but in the long run, we end up burning our hands. And some of us burn our hands in the short run as well. So the point I'm trying to make here is that the market acts like a weighing scale. If you let the market do its job, then you will be better off for it. For example, if you're buying gold, suppose, gold is something all of us understand quite well. If you're buying gold and someone is saying that there's a lot of gold I want to sell in the market now, would you now, if two guys without knowing what the gold is worth, how much, there is in the locker, you just know that there's this guy who says that this is the lot. Supposedly he says that this is the assets, liabilities, and, this is how the business is running. And you chase it and then you say that 10 other guys are going and buying, bidding on that lot. I want to go bid on that lot. No one would do that. You'd wait for the lot to come out.
Funny thing, this happens in auctions, where the auction company themselves will put some of their own people there, spotters, who will be bidding up the price.
Yes.
So if they see a ticket and it needs to be bidded up, the guy will be seeing if people are warming up to it. So the guy will push the price even further to see how much more he can squeeze out of it.
Yeah.
So the main psychology is this fear of missing out, like you said. The other is loss aversion.
Yeah.
So flip out of is the same reason why people hold on to things, even when there are better things available. They rather hold on to their position because they feel
they can recover. And they can be made whole.
Correct. So
that's the thing. That's the point I'm trying to make with the gold example as well. You would want to take the gold, examine it, make sure it's real gold. Then you put it on the weighing machine. You see what the weighing scale says. 100 grams, 200 grams, 10 grams, 1 gram. Once you know what its weight is and you've authenticated that it's, genuine gold, then you'd go and make a bid on it. That makes sense. And you would have given other people the time to also make a bid on it.
And once it goes out of value of what you think the right reasonable price is, then you should just back out.
Yes. That's the main point with IPO investing. It's a lottery system. And yes, sometimes you get lucky. More often than not, in the long run, you do get your hands burned. And I know this infographic is not up to date, but it still paints a good picture. If you collate the latest IPOs done in India, if you take the past 25 IPOs done in India, and maybe we can take it up as a project and do it. But if you look at that infographic, I'm sure you'll see a very similar picture. I can think of a few names right off the top of my head, and I do have it on the screen here, but I don't plan to name any names because I want this to be an exercise for those of us watching us, so that you can verify for yourselves whether what we're saying is true or not.
Yeah.
So that being said, we hope you enjoyed this video. If you enjoyed the initial segment, do let us know. If you have any comments on it, also please let us know. Thank you for watching Be Rich. If you liked it, please hit the like button. Please subscribe if you haven't already. Hit the bell icon to get notified of when we upload our latest video. And if you have any other opinions or comments you'd like to express, please leave them in the comment section below. Thank you again for joining us on Be Rich.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.